Hey there, everyone! Welcome back to our channel. If you're new here, I'm so glad you found us. Today, we're diving into a topic that can feel a bit overwhelming at first but is super important for anyone looking to invest in stocks, dividends, and specifically, what a dividend yield is. So, grab your notebook and let's get started. Now, you might be wondering, what exactly is a dividend yield and why should I care? Well, let's break it down in simple terms. If you're investing in stocks, particularly dividend-paying ones, knowing about dividend yield can help you make smarter investment choices. So, what is it? To put it simply, the dividend yield is a financial ratio that shows how much a company pays out in dividends each year relative to its stock price. It's expressed as a percentage and helps investors gauge the cash flow they can expect from an investment in a stock. Here's the formula to calculate it. Dividend yield equals annual dividends per share divided by price per share times 100. Let's break this down with an example to make it crystal clear. Imagine you're looking at a company called ABC Corporation. Suppose ABC Corporation pays an annual dividend of $2 per share, and its current stock price is $40. Using our formula, we can calculate the dividend yield like this. Dividend yield equals $2 divided by $40 times 100 equals 5%. So, in this case, you would have a dividend yield of 5%. This means that for every dollar you invest in ABC Corporation, you're getting 5 cents back annually in the form of a dividend. But why is this important? Dividend yield provides a way for investors to assess how much return they're getting on their investment, separate from any potential stock price appreciation. For example, if you bought shares of ABC Corporation at $40 and the stock price rises to $50, you're not just benefiting from the price appreciation. You also continue to earn that 5% yield based on the original price you paid. Now, let's look at a few more examples to understand this better. Take another company, XYZ Incorporated. They might pay an annual dividend of $4 per share, but their stock price is $80. So, the dividend yield would be a dividend yield equals $4 divided by $80 times 100 equals 5%. Now, compare that with DEF Limited, which offers a dividend of $3 per share and a stock price of $30. Dividend yield equals $3 divided by $30 times 100 equals 10%. Here, DEF Limited has a higher dividend yield, which might make it seem like a more attractive option for dividend-seeking investors. However, it's essential to dive deeper before making a decision. A high dividend yield can sometimes be a red flag. It could indicate that the company's stock price has dropped significantly, which may be due to underlying issues with the business itself. For instance, if DEF Limited has a yield of 10% because its stock price plummeted from $50 to $30, it could signal problems that might affect the company's ability to pay dividends in the future. On the flip side, a lower yield doesn't always mean a poor investment. Companies with lower yields, like ABC Corporation at 5%, may have more stable earnings, and they often reinvest their profits for growth, which might lead to a higher stock price over time. It's also worth noting that different sectors have different average dividend yields. For example, utility companies typically have higher dividend yields because they generate steady cash flow and tend to return a significant portion of their earnings to shareholders. In contrast, tech companies might have lower yields as they often reinvest profits to fuel growth rather than pay out dividends. So, to wrap it all up, understanding dividend yield is crucial for making informed investment decisions. It helps you assess the potential cash flow from your investments, but remember to look beyond the numbers. Always consider the company's overall health and the sustainability of its dividend payments. If you found this video helpful, please give us a thumbs up and subscribe for more financial insights. And if you have any questions about dividend yields or investing in general, drop them in the comments below. We'd love to help you out. Thanks for watching, and until next time, happy investing!